And welcome to my morning report analysis videos on Friday the 18th of August with me, Richard Perry, market analyst at Hantec Markets. We've got an interesting move on markets where we've got dollar weakness but also risk sentiment being low, and that's come as a reaction to yesterday afternoon whereby markets responded to rumours that Gary Cohn, one of Donald Trump's sort of chief economic advisors, really was on the brink of quitting. This sort of suggests that there's continued tensions amongst the Trump administration and problems over how Trump's going to be able to get through any sort of tax reform, with Cohen being one of the main advisors on that. It sort of saw quite a significant move to the downside on US equities. And let me just show you how certainly the S&P 500 fell away sharply at 1.5%. The Dow down 1.2%. That sort of fed into the Asian session and now the European session. We've seen a big move to the downside on the S&P 500 now, which, as you can see here, has broken this uptrend channel. Or certainly the big uptrend that we've been in since beginning of December on the S&P 500. So it's a really significant decline we've seen now. We're now seeing a lower high and lower lows posted on the S&P 500. And that's sort of accompanied by a sharp increase in VIX volatility, which again sort of points towards the increased fear that markets have had, sort of fund managers taking out additional short position covering. Short portfolio covering there. And what we see is treasury yields which spiked higher. So we've got the 10-year, treasury yields spiking lower. So the 10-year sharply down. And also the 2-year, more specifically, sharply down as well. And that, a little bit of an early rebound today, but that's sort of come down again. So the dollar sort of remains under pressure, and sort of moving again slightly to the downside, with pretty much across the board FX majors up against the dollar. The yen being a chief outperformer on that move. So you've also got gold, which is pushed higher. Gold back into the 1290s, pushing above the reaction high that you saw the other day, 1290 figure. 1296 is the big June high. I'll talk about that in my analysis videos in a bit. But some really interesting moves that we are seeing. So, what have we got to look forward to today? Well, not a massive amount actually on the data front. Just Canadian inflation and the preliminary Michigan sentiment. This afternoon. 94 is around about where we finished last month on the Michigan sentiment, so not a massive amount to really sort of affect markets, I think, today. Now, in terms of my chart of the day, we've got Euro Sterling. Now, what we have seen in Euro Sterling is this move higher. Consistently since May, we've been basically pushing higher, and this uptrend has been intact for the last 6 weeks or so, testing that that 91.40 level, and I'll zoom out and you can see the importance of that level, because that was aside from the big flash crash on sterling, which saw that massive spike to 93.65 against euro. The market really has sort of decisively sort of been turning lower in October at 91.40. So that is a big resistance that I think the market is looking out for, and it has been testing that resistance throughout this week and rolled over a touch. Now, is that rolling over now just a retreat back to the uptrend and going to be a buying opportunity, or is it starting to see the momentum indicators rolling over? It's interesting because at the moment on the daily chart, nothing really too sinister for the bulls to be concerned about. However, on the hourly chart, there is this sort of marginal sort of rolling over where the MACD lines have turned down below neutral, the RSI sort of failing under 60 now. Sort of a marginal sort of bear divergence as well, you could argue, on the MACD lines. And the support at 90.60, which was yesterday's reaction low, but 90.50 to 90.60 has been a key level throughout sort of this week, really, being bit of a pivot around 90.50 as well. So those are two levels of support that the market will certainly be paying close attention to. If you break below 90.50, certainly that would complete a head and shoulders top pattern and roll over, but the market is just sort of drifting at the moment, just coming lower as the euro has started to underperform sterling a touch in the wake of the in the wake of the ECB minutes, which sort of pointed towards the fact that it was the ECB was concerned about the high level of the euro, and that could start to sort of play into a bit of a more dovish or sort of holding on to the dovish outlook and a less hawkish outlook than perhaps had been expected from Mario Draghi and the ECB, with sort of concerns about the value of the euro. So that might start to sort of weigh on the euro a touch, and that would pull euro sterling lower. You've got that uptrend that comes in at 90.73 today. So yeah, a bit of a sort of a near-term dip, but is that going to be now sold into? It'll be interesting the fact that that resistance at 91.40 remains intact, if that is the case. So I wish you good luck in your trading today, and I will speak to you later. Thank you.